हेलो एवरीवन, मेरा नाम है सी ए ऋषभ और आई एम रिकॉर्डिंग दिस वीडियो टू मेक यू अवेयर अबाउट important and critical things that you should keep in mind before you file your income tax return for financial year 25-26. So let's start. So, like, ITR filing for financial year 25-26 has started, but I would say don't rush. Filing early without checking a few critical things can lead to mismatches, notices, and unnecessary stress. I would suggest six essential checks that you should take into account before you proceed for filing. First is check your AIS and TIS. So as you are aware, AIS stands for Annual Information Statement and TIS stands for Taxpayer Information Summary. And the deadline for updation of these two documents is 31st of May. So your AIS and TIS are the most important documents this year. Banks, registrars, insurance brokers, financial institutions, credit card companies upload high value transactions till 31st of May. So if you file before that, you may miss entries like large cash deposits, FD investments, property transactions, high credit card payments, or some shares or bonds purchases or any sort of financial information that you have entered into, but it's not getting reflected in the AIS or TIS. And any mismatch can trigger a notice from the income tax department. So review your AIS and TIS carefully before you proceed with income tax return file. Okay. So second comes is Form 16 and Form 26 AS. So as you know, Form 16 is the TDS statement or the TDS document that your employer provides to an employee, which states that what all TDS deductions have been made from the salary, what is the amount of salary that's being paid, and how much TDS is deposited in the government account. So it's a complete synopsis of your entire TDS for the financial year. Okay. So your role is to first do not file your income tax return just on the basis of Form 16. TDS department or the income tax department relies on Form 26 AS for TDS credit. If Form 16 shows higher TDS but 26 AS shows less, your refund would be denied. So get your employer or bank, or in case if you find any discrepancy between both of these documents, it's your responsibility to get your employer or the bank to correct the reporting before filing. Okay. Now, third most important thing is choose the correct tax regime. Now, as you all know, there are simultaneous two regimes being run right now. One is the old tax regime and one is the new tax regime. While old tax regime comes with a lot of deductions and exemptions, but higher tax rates. On the other hand, the new tax regimes doesn't offer any sort of exemptions and deductions, but it has a very subsidized income tax rate. So before you proceed for an income tax return, just ensure that you have selected the correct income tax regime. The default is new tax regime. If you opt for old tax regime, then make the necessary selection while filing the income tax return. And selecting the incorrect income tax regime can unnecessarily create the burden and can unnecessarily increase your tax. uh, so salary taxpayers, as you all know, need to select ITR 1. Okay. And they can switch their regimes every year. For businesses or presumptive taxpayers which file ITR 4, they must follow stricter rules and they may need to file Form 10 IEA to switch their regimes from current year to like from their earlier selection to their current selection. Okay. Now, fourth comes is that you need to report all your bank accounts and reconcile credits for ITR 3 and ITR 4. Reporting all accounts is now mandatory. Like it's very much important to report all your bank accounts, be it with public sector bank, be it with private sector bank, be it with cooperatives. Like you need to report them and you need to reconcile every debit and credit that you have made, whatever income that's being reported in there, whatever expense that you have incurred, be it in terms of investments or personal expense, that is supposed to be reported in your income tax return. So you need to check every credit entry, be it salary, rent, interest, loan, UPI receipts, etc. Unexplained credits, loans from friends, or gifts from non-relatives can become taxable. And Also keep in mind that bank balance is not equals to FD balance or credit card balance. Those are reported separately. Okay. Now, fifth point is you need to reconcile your high value investment and market transactions, share purchase, bonds, debentures above 10 lakh, futures and option turnover, and any unlisted shares must be reported even if you made a loss, even if you suffered, even if you didn't earn any profit on them, but still you need to report them. So be it profit or be it loss, you need to report everything, and missing these entries is one of the biggest reasons for scrutiny, I must say. So try to avoid any such you can say lapse while filing your income tax return, and uh, file everything whatever information you have, and like be tension free. Now the sixth and the last point is you need to check the mandatory filing conditions. Okay, so like before you file the income tax return, there are certain important you can say conditions which makes it mandatory, although a person is not required to file their income tax return if he or she is like falling below the you can say below the taxable limit, but still like there are certain conditions, there are certain provisions. If you fulfill them, you are supposed to file the income tax return. So some of them are like if you have a business sales above rupees 10 lakh, you have made a foreign travel and you have an expenditure of over rupees 2 lakh, you have paid an electricity bill above rupees 1 lakh, you have a TDS TCS of rupees 25,000 and for non-senior citizens and 50,000 for senior citizens. You have any foreign assets or income, and you have made any losses and you want to carry them forward, then you are mandatorily required to file your income tax return. So like these are the 6 points that one should keep in mind, and these 6 points are not the exhaustive list. So these are just some important considerations that a taxpayer should keep in mind before filing their income tax return, because as you can see, year on year the scrutinies, the assessments, the detailed vigil over your expenditure, over your income, over your bank account statement, whatever financial transactions that you are making is getting stricter. Income tax department is digging deeper into your transactions, so it's better to avoid any sort of uh, issues or problems that might occur earlier, and it can cost you a lot in terms of interest, penalty, or any delayed refund. So it's better to keep these things in mind, other than some other like important information that needs to be submitted with the income tax return, so you can remain tax free, you can remain tension free, and you can file your income tax return and get your be it getting a refund or be it tax payment, you can do it in a very easy manner. Thank you very much.